Hi, everyone. It's Jonathan Holland speaking from Curexe. I'm the founder and CEO, and I'm just wanting to do another market update for you guys because there's been a lot of exciting movements in the markets for the US dollar and Canadian. So, for those of you that didn't see my last technical analysis videos, I'd encourage you to go back on YouTube and watch them. But I basically teach you how to look for chart patterns, which is what traders use for short-term movements in any type of market. And in this case, it's with currencies, but they use it in stocks and commodities. And essentially, what it means is traders look for psychological levels that people would rather buy the asset or when they would rather sell the asset. And in this case, now we've actually had a lot of downside happen recently to the US dollar. And this is what I want to talk about today. So, first, I'm going to do a little bit of history here. You can see the chart. So now we're into 2017, but if we go back kind of a couple of years back in 2015, see, these are longer term trends. And what I want to show is back here where there was a trend line, which they called a support line, that was pretty strong. It was pretty evident. There was a lot of buyers bouncing off this line. So you knew that this is kind of an upward market, which is called a bull market. And the US dollar was on a strong run against the Canadian dollar. And you can see that it had these bounces, had big upticks, and even came down to test these levels and had good, strong bounces from the bottom. Now, it wasn't until around this time in 2016 that we actually had a breakout below support. Now, when a breakout below support happens, it's usually a negative thing where the trend can reverse. Now, it can short term over a couple days break through and then come back up and kind of continue to trend. But ultimately, you want to follow these lines. And this right here was a clear sign that the trend started coming down a little bit. It doesn't mean that now we're going to start trending negatively and now we're into a bear market, which is a market that's declining. But what it means is that the market's going to shift and the traders are going to have to find a sweet spot now based on the economic news, based on what's going on in global economies, on what they think the price should be. And now what we're seeing is we've mapped out a new trend line. So it broke free and kind of came down and tested this level. And because it tested this level so strong, we had a point to reference, which is back at this support point on the earlier trend line. So because we had a trend line to reference, traders tend to map the line out from these levels and see that as a strong buying opportunity. So you want to buy the US dollar on those trends because you buy it for a lower amount and you're hoping it climbs and then you can sell it. And then in this case, we've had some pretty strong bounces. And what you want to do is you want to look for resistance levels. There was a strong resistance level here. We had a nice little breakout. It was great. This doesn't look as big as it was, but this was actually a nice little breakout from there. And since then, there's been a lot of negative economic news in the U.S. and the fact that they will continue to continue to keep interest rates low for the time being, at least. I mean, there's going to be rate hikes. But the market's a little bit nervous and nobody can really tell. So essentially what's happening is there's a decline in the US dollar, and now we've come back down to kind of test this level. So now might be a good time to buy US dollars. So if you're sitting on Canadian dollars, you need to exchange it to US dollars to pay a supplier in another country. Now is like the best time to do it. You might even want to take your Canadian, exchange it to US dollars and just hang on to the US and then wait to make that transfer to make your payment to a supplier. But I wanted to give you this quick overview of the chart because this is what's going on in the markets, and it's a great time if you have CAD and you're moving into USD. If you're holding USD, I would be a little bit patient. We're probably going to have a bounce off the bottom here. The higher this thing can climb up, the better it is when you're holding your USD, needing to sell it back to Canadian. So for those of you that get paid in US dollar revenue, try and hold out a little bit if you can. And for those of you that need to make payouts out in USD, now is a great time to start making those payments. Thanks so much, guys.